Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around just about 11 o'clock, markets are holding out in the green, and in fact we've seen an all-time high this Monday morning when we did start off with the trades. Before I go any further, let me give you certain levels on the Sensex, Nifty Bank, Rupee Dollar equation, and of course crude oil. So Nifty is up about 350 points, 74,004 is the level on Sensex. Nifty is up about 135 points, 22,460 is the level on Nifty Spot. Nifty Bank Nifty up 395 points and the level is 47,515. Rupee dollar equation, a little bit of weakness on the rupee of 0.04 paise and the level is 83.44 rupees to a dollar. On the Brent and NYMEX, also there are elevated levels. This morning, NYMEX is trading at about $87.27 to a barrel. Beg your pardon, Brent is trading at about $87.27 a barrel, and NYMEX is trading at about $83.46 to a barrel. So Brent, NYMEX, and rupee dollar equation. Rupee dollar, I think after seeing the kind of weakness that we've seen, we could possibly witness a little bit of strength in the rupee as we go forward. And not to forget, on 5th of April, that is Friday this week, we will have the credit policy, though the expectation is of status quo on the interest rate moves, but governor's commentary as far as the credit policy is concerned can strengthen the rupee a little bit from here. So expect levels of 83.03, 83.02 as we go into the credit policy on 5th of April. On Brent and NYMEX, the sense is that we could continue to see elevated levels unless and until we'll see meaningful news flows which will have an impact on the downward mood as far as crude oil prices are concerned. But these elevated prices are possibly likely to stay unless and until we have some global news flow which can bring down the crude oil prices. So we'll have to prepare for an elevated crude oil prices, both Brent and NYMEX. Coming to the markets, friends, I think last week, let me give you a little bit of, though we did share our market outlook on Wednesday, of market being truncated, of F&O expiry, weekly expiry, etc. But it was very interesting on Thursday when the F&O expiry was there, because on Friday we had an holiday on account of Good Friday. So Thursday we had the F&O expiry. Thursday we had a crossover of earlier high on Sensex and Nifty, and we had a closing, though it was a little bit lower from the intraday highs that we were at, but it was comfortable to see that kind of higher level, given the fact that it was a 3-day trading week and we had the weekly and the F&O expiry. So given all positive marks to the markets. And this morning also, when we started off the trade, it was a slow steady rise towards the highs that we saw on Thursday last week, and then a crossover. We did manage to see new highs on both the indices, that is Sensex and Nifty. Bank Nifty, however, we will possibly be seeing it sooner rather than later. So expect the markets to trade with positive bias. A crossover of 22,550, 22,560 could possibly see levels of 22,700, 22,800. On the lower side, friends, in case if the selling pressure has to get highlighted, 22,175 and 21,950. These are the two levels. I'll again repeat, on the higher side, if we are able to give a breakout and closing above 22,550, 22,560, then we could move towards 22,700. On the lower side, if we do succumb to the pressure and if we break 22,175, 22,150, then we can possibly go lower towards 21,950. So it's again a broad range, given the fact that we have a huge lineup of event. Along with RBI credit policy, next week we will see a curtain raiser possibly for the fourth and the final earnings season this financial year, and I guess sectorially and stock specific you will see some movement coming through. On the auto front also, we'll have interesting month-on-month numbers coming out, which will possibly give us some kind of direction, and it will more be a stock specific move. depending upon which company has to announce a little bit of more and positive month-on-month sales numbers. And like I mentioned, global news flow will also have its impact on our markets, though we can possibly outperform the developed markets and other emerging markets. But at the same time, not to forget elevated levels, 19th of April, first phase of election, and intermediate commentaries from political parties, political leaders can play a spoke in the wheel just for the intermediate period. So remain very optimistic as far as the markets are concerned, though like we've been maintaining over the last almost about week, fortnight, since last month, month of not only month of March but month of April, Feb, that choppiness and volatility is going to be order of the day given the longish election phase that lies ahead of us. But there will be plenty of opportunities to invest now, during that time, and even after that. And as always, friends, we give you two investment ideas fundamentally from a long-term point of view. This time around, we have one private sector bank and one private steel manufacturing company. And the private sector bank is no surprises, HDFC Bank, given the kind of performance, given the kind of margin pressure that we saw in third quarter. But post all that, our sense is that from fourth quarter onwards, that numbers that we are likely to see very soon, and starting today, that is new financial year, 1st April 2024, going up to 31st March 2025, you will have slow steady improvement in the earnings, and that will possibly call for a re-rating of the stock. And the fact that it has been an underperformer, entry exit in large cap, mid cap or MSCI index does not qualify for much moves rather than just 1-2 day move. Fundamentally, I think earnings are going to come out very strong. So HDFC Bank, of the risk reward, keeping in mind the risk reward, fundamentally, first one is HDFC Bank, and the second one is from the metals universe, Tata Steel. This company was in the news flow for its plant in the UK, and of course Chinese data did have its positive impact not only on Tata Steel but likes of JSW Steel, JSPL, Hindalco, etc., etc. The reason for picking up Tata Steel is again the risk reward, and our senses from the levels where it is trading. Of course, Chinese news flow will have its impact, but notwithstanding that, if you have a longish time horizon, it is favorable for long-term investment. And once we have a decisive government in place post 4th of June, and the portfolios being allocated, government spending will again pick up in terms of construction activity, Bharat Nirman, private capex picking up, etc., etc. And there is also a possibility, friends, of a small amount of increase followed by a larger increase for flat and long products. And input costs have come down, so margins can improve. So two investment ideas from a long-term point of view fundamentally. First one is HDFC Bank and the second one is Tata Steel. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.